more companies, Indian Bank is on our radar. It reported what was an operationally good set of Q1 FY24 numbers. The bank witnessed improvement in net interest margins. Slippages have declined nearly 28% Q-on-Q. Shantilal Jain, who's the MD and CEO of the bank, joins in now. Mr. Jain, hi, welcome to the show. Well, let's start with this parameter of slippages, which has fallen almost around 28% Q-on-Q to close to around 1900 odd crores. Which segment did you see lower slippages, and what is the quarterly run rate of slippages that you can guide on?
You see, our slippage ratio is coming down on a quarter-on-quarter basis. This is also the slippage of 1.57%. It is basically from the MSME. But the slippage is coming down from all segments, whether the retail, agri or MSME. Now the restructuring portfolio itself is also behaving good. So slippage is coming down. Our recovery is improving. As a result, our gross and net NPA is declining.
Correct. But sir, if you could just guide us on how much we can expect in the next 3 quarters from the bank when it comes to slippages. Do you have that kind of visibility, and if you could share that guidance with us?
Slippage means your collection efficiency and your SMA numbers. So SMA 1 and 2 are under control, and therefore we can say that the slippage should come down going forward. And the slippage, what is happening basically from the restructuring book in MSME. So whatever slippage we are having, around 45% is from the MSME and half of that is from the restructured book. Now, but the recovery is happening, the repayment is coming. So going forward, we see that slippage should come down in future also.
All right. Could you give us a sense of what is the kind of recoveries that we should look at going forward? The last couple of quarters, you've done an average recovery of almost 11 to 1200 odd crores. And at the same time, what's increased are your write-offs. Your write-offs this quarter have gone past that 2100 crore mark. So on both recoveries and write-offs, what is the quarterly number that we should work with?
At the beginning of the year, we said that our recovery for the whole year will be around 8,000 crores. So around 2,000 crore per quarter. This quarter also, our recovery was 2,008 crores. And you see last year also, all the 4 quarters and in the current quarter, our recovery is more than the slippage. And this trend will continue to the next quarter of this financial years. So as a result, what will happen? The gross and net will come down, and recovery is happening from all angles, whether it's from NCLT or from the OTS or from the SARFAESI, from the ARC, all.
And write-offs?
And write-off, we have done a write-off of around 2,000 crore. But here the write-off is basically from the books where we are already having 100% provision, and write-off comes from the technical side as well as from the prudential side. And whenever we do some OTS or some recovery comes from the NCLT, some parts are to be written off.
Okay. Your NCLT exposure stands at over 23,000 crores. Is that correct?
Yeah, it is correct.
Okay. And what are the number of accounts in NCLT, and what is the resolution expected?
So what happens, the last quarter we have received around 286 crore from the NCLT. The current year we are expecting the total NCLT recovery of around 1,300 crore, of which 286 already come 1,000 crores. So what happens, even in the NCLT, around 10,000 crore of book where the account is in liquidation, the amount is coming from the liquidation. Around 5,000 crore of book where resolution has already been done. So recovery will happen from the resolution book also. And at the same time, some bits we are receiving from NARCL, so we'll get money from the NARCL also. And wherever the bits have received better than the NARCL, we are getting recovery from them also.
All right. Operational performance and this year's guidance, apart, Mr. Jain, I would want to know your strategy here at Indian Bank, because you come from Bank of Baroda, which has done a good job in hiring a lot of people from the private sector itself. Do you think that is something that you will do here at Indian Bank as well?
Yeah, in Indian Bank too, we started taking people from the private sector. We have taken people for our IT, for our cyber securities and all. What happens in some of the areas where you need a expertise, you need a competence. So therefore, we are taking from the market as well. As far as our strategies, business strategy is concerned, we are continuously maintaining the 61% RAM sector and a 39% corporate sector. Last quarter also it was 61-39. Even the last year also it was the 61-39. And we are growing 13% in the RAM sector and around 12-13% in corporate sector and maintaining that. And because of this mix, we are getting a good margins and profitability, and which is appearing that our NII has grown by 26%.
Okay, quickly then, Mr. Jain, before we let you go, your net interest margins of 3.56%, guide us for the rest of the year. What will it look like? What is the range?
So our domestic NIM, that was 3.59 in the last quarter. It has improved to 3.61. You see that the RBI has increased the interest rate by 250 bips. And as a result, the cost of deposit has increased in a 1 year by 75 bips. But the margin, which was 3.10 in the last year, has improved to 3.61. So it shows that we are not only able to manage the increasing price, we are able to improve our margins. And going forward also, we are given a guidance that 3.41 was a margin in the last financial year. And last time we said that we will be able to protect that margin, and we are better than this. 3.56, which you are talking about, is a global margin.
Okay, all right, Mr. Jain, we're going to leave it on that note. Positive in terms of guidance. That's Indian Bank stock up around 3.5%. Thanks very much for joining in and speaking with us. We'll take a short break. On the other side, we'll be touching base with the management of Arvind to discuss their Q1 performance. Stay tuned.